the December 16 event, where the whole of the financial services industry have changed because of one event, one day, when the Prime Minister has announced some currency become void, and every penny from everybody's pocket has gone into the bank. And I think that opened the big door. That opened the first door is bankability. So bankability has humongously increased at all parts of the pyramid. The bottom of the pyramid, middle of the pyramid, top of the pyramid was always there. And middle of the pyramid is also very inclusive, and it was always there. So demonetization actually was a big benefit to the financial sector, financial services sector. Though at some point of time, some sectors like lending felt a little uneasy, but all they came back. So my sense is that financialization of economy and having more people bankable and having more people are now having option to invest into every part of the asset class actually have changed the way people invest, the way people also allocate their asset and de-risk the whole wealth under management of the individual. So I think we are one such beneficiary, and we are a significant beneficiary to my mind, because 16 pre-demon and post-demon life had changed. So pre-COVID and post-COVID life is also going to change. So the fact here is that post-COVID, what is going to happen? The post-COVID situation, the pre-COVID situation is that there was lots of money was chasing investments, largely financial instrument, which was a new asset class got opened up to people, and we saw that in SIPs of mutual fund big time, and we saw almost 100,000 crore last year came into the market, and the flow continues, and people have not stopped the SIPs. Similarly, we saw the same and even more aggressive flows by the affluent HNIs, super HNIs, ultra HNIs into the portfolio management, where the ticket sizes are significantly large. Like currently it is 50 lakhs, but we could see the flows were not stopping, because that one asset class was giving best reward against the risk people thought they are taking. And at that point of time, the other asset classes like gold was doing very well, but at the same time, real estate did not do as well. So people have started losing confidence because the asset class itself have not grown, prices have not gone, and at the same time, there was a completion risk and there were associated risk of the industry, which probably also got corrected in a RERA kind of situation where governance brought to the table. The disclosure and transparency got to the table, and a lot of people started again thinking that this asset class is not dead, but this asset class is also one of the option available. But who looked at that asset class that time is the only home user, not really an investor per se. Post-COVID situation, to my mind, clearly it is definitely a never seen, never heard situation once in a decade. But my sense is that any crisis, whatever negativity, whatever apprehension, whatever is the risk framework each guy activates, each person activates. But I think this is the period where everything would be available at enough margin of safety, because the good is really getting better and far superior, and the bad is getting out of the door. So here is the time to really identify those businesses which probably have grown fundamentally. Those businesses are quality. Those businesses are quality balance sheet. Those are bankable, who can get capital. So my sense is that post-COVID, even though real estate in specific you said, and why I said real estate, private equity, because there is almost 20 lakh crore sitting in the bank's balance sheet is housing finance. So we should better be worried about the real estate as a sector. It is the largest asset class a person buys in his lifetime. It is not an ad hoc purchase. It is not a staple purchase. It is a very planned decision. It is a lifetime decision. It is the highest investment by anybody when he starts his life. So I feel, honestly speaking, there would be change. People would be more technology savvy. People would because Corona is going to remain here. We have to live with Corona. And hence people are not going to give up. People are going to, the developer fraternity, any stakeholder in the real estate segment, whether it's a distributor, whether it's a broker, whether it's a developer, whether it is anyone of them linked to the real estate sector, they are adopting technology like never before. And I see the big change. Adopting a technology, changing to the needs of the customer is the second part. So customer has become a center. Everything is changing. And the new word I'm hearing, we exist because of you. And earlier, when good times, it was exactly a reverse story. So my sense is at this point of time, customer has become center, technology has been very important, and the people who have got stronger balance sheet. And when I say balance sheet, that means ability to construct, ability to have liquidity, ability to move the cranes in the next 2 months' time, so that the end consumer gets a confidence that he will get a home of his choice. He will get office of his choice. If he gets that confidence, he doesn't trust anyone today. His only trust is so. So my view is that this particular situation will change, for good, and it will sanitize the sector as a whole.
Super, super. So Sunil, I love the optimism. Um, uh, Getting the customer in the center, getting technology. I think that's going to be across all. I think industries, not only financial services or real estate. I think contactless is technology driven, and that's going to happen. So thank you for that. I think by you mentioned once in a decade. I think it's once in a century. I don't want to see in the next 10 years Corona again, but that's what we will hope that this pandemic goes away. I'll come to you, Pankaj. Pankaj, you have the experience of building huge distribution networks that have actually enabled mutual funds. I remember back in those days when it was only UTI, everybody would say that it is a guaranteed government scheme. They didn't know it was a mutual fund, right? And then obviously mutual funds came in, but you build a huge distribution network. What do you see the change, and how technology and COVID and this contactless? I know mutual funds were the first guys who started using video KYC already, but how do you see in the coming scenario the distribution for mutual funds change?
Thank you, Naveen, and good afternoon to all the people who are on the seminar right now. I'm sure many of my old friends, colleagues, well-wishers are there. So good afternoon to everyone, because of this COVID, couldn't be in touch with many more people physically. So it's a good way of connecting back with all my people. I think such kind of crisis always leads to new opportunity in all sorts of business. It was not like that mutual fund or an insurance. Admittedly, both of them were trying very hard as an industry to start adopting a lot of technology solution, building a digital ecosystem, so that the life of a consumer, the customer journey becomes much more simpler. I mean, as simple as you can go back to Amazon and buy a product, or a Flipkart, you can buy a product, you can service a product. Can you make that kind of a life journey of a customer as simple as that for financial products, whether mutual fund, brokerage, or insurance? Some of them actually had made a journey very well, like brokerage industry. But the fact is that despite trying for last 8-10 years, the success was very, very incremental. And as I always say that whenever there's a chaos, whenever there's a crisis, there's another very, very big opportunity. So let me first really reflect back. We should not be celebrating that COVID has happened. I'm not talking from that perspective. It's very sad. It's taken lives. It's put a lot of people back in their life, financially, health-wise, economically, and many more emotionally. But the fact is, in every crisis, you have to start looking not to become a victim and say that what is going to happen to me, what more you can do. And so as a business person, I clearly see the movement of an industry post-COVID. Now, for example, now 60 days, the industry has been shut. It's not that the SIPs have stopped, because the industry has already moved there. So in fact, industry is doing still a good job in terms of insurance collecting the premium, mutual fund continuing with their investment. So I clearly see technology making a very, very disproportionate growth in the life of the industry and consumer. So what will happen? The whole industry will move distribution challenges which were there today. A job which a technology can do well, a computational job or a service job or outreach job, which physically takes a lot of time, will get immediately replicated by technology. And you can start seeing in some of the mutual fund industry. And this would be an inflection point. I say that before this industry did a renovation in the name of innovation. You put some here and there, you renovated and thought we have innovated. Now you have to reimagine, and that industry will reimagine, and you clearly will see a disproportionate growth coming back in the industry. And as far as the consumer is there, consumer has to be at the center, and people will start understanding consumer far better than what they were understanding before, because technology today allows you to not only capture all the footprint the person thinks or transacts or at, but also helps you understand with the solution. So my sense is industry will grow disproportionately from here. People will be more receptive to listen to you today, because all this noise or chaos in the world after what has happened in COVID, everybody wants to live their life more comfortably. So people will listen to you much better. So it will be new era, new world where technology will disproportionately aid the growth of an industry.
Thanks, Pankaj. So you're right. I think technology is important. Robo advisory was already in. Video KYC was already in. The use of data analytics, trying to customize solutions for individuals, specifically the consumers. The distribution channels would change. There are various channels that will happen. I'll stick to you, Pankaj, because you touched upon insurance, and you come from an insurance background itself also. I've been reading and actually working with a lot of insurance partners, even in India, right? Uh, Obviously, this pandemic has made all of us think as employers, as individuals, as family members. What do we do with our life insurance? What do we do with our health insurance, the medical part of it? So what is your thought? I have seen certain numbers in Asia. There was a number that was quoted that actually insurance went up by 10%. And there were some quotes that came in that people are delaying their payment on insurance. I think that should be the first thing that they should be paying for in this scenario. But can you give us an idea of how maybe life and health insurance will pan out, with this environment at the backdrop?
Yeah, I'll again repeat that it's unfortunate that a lot of things are happening because of COVID, but India is a large country which doesn't have a social security. Now imagine we are a country of 1.4 billion people, 60-70% in a mid-market segment below affluent level, and we don't have a social security. Now, in a country like which you don't have a social security, in the absence of that, insurance will become the backbone for the economy. Not only because if the people are unfit, if people are not healthy, if people are dying at a young age, if they're not healthy enough to go and produce, use their time and energy and their skills for producing growth in an economy, it's going to be a waste of being a 1.4 billion people. So my sense, you will see post-COVID, and it's already started reflecting. In fact, I was talking to somebody this morning, and he wanted some help. And I said, "Well, how are you doing?" He said, "No, I have stopped all my EMIs except insurance." I said, "Why?" He said, "Sir, agar aaj mar gaya to bibi bacche to hai na, main wo theek karna." And I'm not joking. This is a thing which actually happened. So people will start looking at this very differently. They will ready themselves for the future. And I'm saying that it took years. Like, in fact, people are ready to go and insure their car, but not themselves, because that was our forced regulation. But post this, what has happened in COVID, and people have seen the disruption in their lives. My sense is that both the industry, health and life insurance, will grow. One, because of the absence of social security. Number two, people will be ready and more open to understand this product, and which will lead to a lot of innovation in making the products much more simple and easy to understand. But we also have to understand that industry is not that simple. It's very complex in the product and the way it's been sold. So I think
You're right. You're right, Pankaj. In fact, we are working ourselves as CRIF with a few of the insurers to see how it could be frictionless. Can there be a pre-approved kind of a sum assured program that can be created? And data and analytics and technology again comes in there. So yeah, thank you for that. Sunil, now I'll come to you back, Sunil. You touched upon PMS. I'm not going to let you go because one of the largest players in PMS. Portfolio management services is something usually people say we should conserve and protect capital, cash during this tough time, while some people say this is the best time. But you're the expert over here. So what are your thoughts? With this scenario, what should people do? How do you see it play out? What is your recommendations?
As I mentioned in the opening remark, that asset allocation is the name of the game for everybody, whether you are a super HNI, HNI or ultra HNI. And I think equity plays a very important role in getting that compounding impact on the wealth creation part. So it is very important that you have multiple options to invest into equities. You have a mutual fund and you have a portfolio management. Portfolio management is little more specialized. It is more maybe designed for the segment which is 50 lakhs and above. So it is basically designed to take into account the appetite, risk, understanding, maturity, and the asset class understanding. So our view is as simple as that. If you have a 3-year money, either you should put money into fixed income or bank deposits, ideally. If you have 3 to 5 year money, maybe dwell in mutual funds. If you have more than 5 year money, come to portfolio management to make a significant wealth. If you want a significant wealth, you need to be more patient. You need to have more temperament. And I think this is no less good time than any other time, because this is a time where there are the best bank which is currently available for the price of 2016, and that means 5 years back, whatever is the price per share of that bank today is available at the same price with much cheaper price to book, much better price earning multiples, and the growth rate of those banks, that bank or multiple such good banks have not changed. The point I'm making is whether it's a banking, so each sector has sector leaders. So when you look at investment, and portfolio managers really look at asset allocation and selection. So selection of an industry and selection of the companies within the industry. So by looking at the top quality management, looking at COVID impact, COVID is going to impact every company. Let's not be kidding. It is going to touch everybody's life. It is negatively, and some of them will be positive as well. There are positive sectors as well. So the fact here is that allocating capital in not so good times, but having the temperament for long term. If that is the reality, and if you are saying that the country has a potential, but 21 is the year you are ready to forget, and you are going to look at 22, I think capital market looks very exciting. And the good quality companies would come back, and then all those recoveries, whether it is V, W, U, Nike shoes, I do not know. All those will come into play. In the simple fact is that good quality management, good quality companies, in the size of the opportunity so large, and having quality of earnings and earning growth in place, those companies are available today at enough margin of safety. And that's where I think there is a solid case to look at asset allocation, but provided you have a 5-year patience. If you don't have 5-year patience, this equity is not an asset class for a less than 5-year investment.
Got it. So I think the basics, what you're saying remains the same. You're looking at 5 years. This is probably an opportune time. You get good opportunities to come in over here. Fair enough. One more question to you, Sunil. I known you, and you have moved from an excellent manager to a promoter to an owner, promoter, manager, entrepreneur. So you've done all that. What is your advice specifically at the backdrop, because you also have an NBFC? So how do you see, and what is your advice? Because I'm assuming there'll be a lot of our participants who are, leaders in their own right within that space. But you have this unique thing of doing all these. So what is your advice?
Frankly, Naveen, we have a very small NBFC. Very small, and that NBFC focused only on the wealth customers to create liquidity, to create some leverage in the need for a very short period of time is the only focus of that NBFC. So frankly speaking, that is a very small business. But the key question is that pre-COVID, and even COVID has made even much more clearer to each one of us, and to me at least, that we should be only doing what we are good at. Never try to dwell into something which is not your core competence. When situations are tough, only play where you can play well. And that's where focus, discipline, and looking like a mundane, boring would make you far superior as a company, as a manager, as an individual. But keep walking, and play ball by ball. Don't throw the wicket. You are like Rahul Dravid now. Nothing is coming to a bat, but you are getting nervous. You are getting impatient. But you need to be there on the wicket, because the next day when the sunlight will come, the pitch will dry, ball will bounce, and you will hit them to sixes or fours or even multiple kind of situations. So patience, temperament is very important. So I feel unnecessarily diversification in the current situation is completely avoidable. In fact, leverage is a very time bomb situation. As you touch the NBFC part, most of the NBFCs were looking very exciting because of the leverage. Now, in the post-COVID region, people would be thinking that whether leverage returns is a very good way of assessing an investment, or the investment in fundamentally should have the basic returns, and in a growth phase, the leverage would accentuate the returns even far higher. So leverage cannot be only making the investments viable. So that's A part. B part is the carrying excess liquidity on the balance sheet is a drag. We always won't like to put every penny in the market and earn every possible thing. But because post-COVID era, today the risk is not economic. The risk is not demand supply. The risk is survival. The risk is solvency. If the solvency risk is there, then what you will be doing all the time is carrying loads of cash on the balance sheet. Because having stronger balance sheet, calibrated growth, playing by the rule book, playing where you are good at, and keeping that focus time and again, I think is the way. I think at least this COVID part of the story, the hum can be crossed comfortably.
Thanks, Sunil. I think you said it all once you mentioned Dravid. Play by the book. Be patient. So I think that's great advice. Pankaj, I'll come to you. Pankaj, as Shiv mentioned in the opening, you have seen crisis and you have been able to make huge opportunities in those crises. Can you give me one example? I know you've done it thrice, but one of those which were the most important examples of converting this crisis into an opportunity and how you built it.
Okay, so I will try and give it from the very recent past, because if I go back in the history, it will not only tell about my age, but people on the call may also know not about it. Let me tell you two very small examples which happened in quick succession for all of us in the recent past. First happened in demonetization time. So when demonetization happened in 2016, I was sitting with my team, and all of us came back and said we are finished. It's a big crisis because there's no cash, and my 60-70% of the collection used to come from small tier 2, tier 3 towns. Out of 35-40%, I don't remember the exact number, used to be cash. Now, if there's no cash in the hand, how will I going to get my renewal premium? It means my business will actually go down. My costs are not coming down, but my revenue disproportionately will go down by 40%. So it was a question where everybody's saying that let's go and cut the cost, let's cut branches, let's cost 1, 2, 3, 4. I said this is the biggest opportunity. And what has happened is basically lots of money is going to come back in the banking system, as Sunil said. This is going to make the interest rate go way cheaper. This is going to make interest rate continuously go down. People have to ensure what they're going to spend money in future. The only way you can do it is to buy an insurance product. Can we construct a product which will actually ensure them a decent rate along with the protection growth over a period of time when we actually had it? Now that product was already available. And to your surprise and my surprise and everybody else's surprise, we started with so much of negativism. But if you have optimism, the one thing in crisis to succeed is to keep your head above the water and believe the positive. Because if there's anything going bad, there's also equal opportunity on the good side. We raised our aspiration, and the month, 9th or 8th November, I think demonetization was discovered. 25th November, I had a meeting with my team. We were offshore somewhere else, 19 hours in one room. After 19 hours, we came back. December was the biggest month of my insurance sale. We did some 150% more than we sold ever in our life. It exactly happened in 2008. I was new in my new corporate job, and suddenly 2008 credit crisis happened. And we see that everybody is actually coming down, falling like pack of cards in mutual fund industry. We sat down and said, no, everybody's finished because equities are down by 30-40%, credit is going bad, people are not going to invest money, FMPs were getting defaulted, they were not able to pay the money back, they were asset liability mismatched, nobody could raise liability. I said, you can't find a better opportunity, let's find an insight. There must be something a customer must be thinking. All this problem, basically customer thought, I want to rush all my money back to the public sector banks, FDs and deposits. So basically the insight was that I want safety, and my safety is in public sector, and that safety in public sector is in FD. We created a product in mutual fund in 2008 in Birla, wherein one product in 1 year we sold what we sold for 15 years because we captured that opportunity. So if your optimism is there, if you think positive, you'll always find solution. So important to raise the aspiration of yourself and everybody in the organization to a next level, and that's how the aspiration of the whole organization will go up. So
Super. No, thanks for sharing that. I think you're right. Optimism, find that one opportunity, give it, all the backing, be fearless if you believe in it. I think that's great advice. Thanks. Sunil, I'll come to you, and I want to touch on the consumer behavior. You have, run an HFC. Housing, obviously you touched upon during the real estate part of the conversation on the private equity. Housing is dear to everyone, right? All individuals aspire, like you said, it's one of the biggest investment that you save for. But how is the consumer behavior going to be during this period? We have a lot of our partners who are in housing finance. Also, the consumers, actually, you kind of touched upon, there is this workforce. We are 1.4 billion, but we are a very young population. The millennial population was the spender. They are the guys who are digital natives. They spend on Amazon, they spend on the Flipkarts of the world. So what is the consumer behavior going to be looking at a house? So how does the housing finance companies look at it? There are some pay later products coming on, like an Amazon Pay Later. There is UPI, there is credit cards, spends, personal loans happening. So what is your thought about a consumer behavior during current crisis and maybe post-COVID?
So quick comment, Naveen. I think you actually touched the very interesting subject, because Indians, the way whenever you talk about Indians, the love for the two asset classes will never go. Real estate and gold, impossible. For generations and millions of generations, all the wars between kings have happened only for the territory. So it was linked to revenue, linked to real estate. Those were estate, and then they become real estate when they get developed, correct? So the fact here is that consumer behavior for the housing finance is very, very simple, and I think it is not very complicated. Every person in his lifetime want to buy a home. My father could only build his home when he was in mid-50s. I bought my home when I was in mid-30s. And today, the same guy who is in mid-20s, he is also aspiring to own a home. To give a small example of my own experience, 98, the average age of a home buyer was 47. In 2004, the same age has become 38. And 2008, it became 32. And 2000 and now that age is anywhere between 27 and 28. So we are a young economy. 65% of the youngsters are less than 35 years. So it's an aspiration. Home is the safety, security, and a comfort. To be honest, when I was a banker with ICICI Bank, people used to get married if the girl's parents know that he owns a home. It was one of the additional characteristics for his stability. So owning a home is a very important aspect. So I don't think that what had happened in the last 10-year period, home have become unaffordable. The prices of the homes have really gone up. The sizes of the homes have really increased. And really all the homes were only focused on the top of the pyramid or middle of the pyramid. And there was hardly anything was built to the middle of the pyramid and bottom of the pyramid. So the demand was actually like a pyramid, and the house availability was inverted pyramid. And this crisis, the core reason is that there is a mismatch of demand supply. You are actually looking at a first-time home buyer market. You're looking at a 30 to 40 or 60 lakh rupee home, and the market is talking about a crore home or 80 lakh rupee home. They're talking about a high-tech home. They're talking about luxury home. The reason is that they have not mastered the art of technology or reducing the cost or making it more credible. So the point I'm making is that home buyer is looking for two things. A, his income stability. To my mind, there will be some impact. The people would be a little volatile because of some income volatile or some people losing the income. Second part is the lowest interest rate. The lower interest rate, it actually booms at 7%. 15 years back, I have offered a home loan rate of 7%. After 15 years, the same rate has come today. So if a home loan rate go well below 7%, it only gets hockey stick. The third point is that the 10-year GSEC today is well below 6%. And the rental yield, which was 2%, have now come down to something like, come up now to 3.5%. So all intellectual behavioral part of the millennials that, oh, I will stay in a rented house and I would invest into markets and I can get, the gap is narrowing. Fourth part is within the COVID period, the experience of owning a home and having a home and having a peace of mind was way different. So my sense is that lower interest rate, COVID, having new technology home, having now the supply is available of every segment. So I feel home buying behavior and home loan behavior is also not going to be any more less. If you look at all these period, the best housing finance company, the best bank who has given a home loan, they all were growing between 13 to 15% anyways. So that part is like a building a honeycomb for a bank. You get a home loan and home loan customer, and then you can build every cross-sell opportunity around it. You can give him a credit card, you can give him personal loan, you can gold loan to him, he's a savings account, current account, family account. You can actually, so that's a heart of retail banking. And that you home loan per se may not be very profitable business. It's very, very cutting, thin, very competitive business. So, but I feel the millennials who probably have thought of not owning a home, I think after this period, working from home is going to make them think differently. The rental yields going to make them think differently. The new homes will come little less, or they would come little at a staggered manner, because the many homes may not get completed because of the cash flow issues associated with the industry. So I feel, honestly speaking, this is the solid superior time for the people who have a ability of taking a loan, who has a stable income, look for opportunity. This is a time to get a good deal. This is a time to get, markets already down. There is a time correction. Over and above, there is a 10 to 15% correction already happened. My sense is the nearing completed homes today would be available. Nobody wanted to negotiate with you for the price. They are looking at liquidity. So the negotiation can happen. You are looking at price, he's looking at liquidity. Deal can happen, and deal can happen at a very attractive. So my sense is that a lot of people will take this opportunity. Five year from now, I think we will have the same situation like what we have seen in 2005 and 6. Down payment at a stage where you want to own a home, and if you don't buy on a Friday, Monday you would get a price increase, because you will not have a supply of homes. All these next 5 years, you will have consumption of all these homes, because the industry is going to shrink, the supply is going to shrink. And hence, I clearly feel that behavior change, not only home buyer, behavior change in the banks, behavior change with the developer, behavior change with the intermediary who is going to be digitally now making it easier for him. Everybody is going to change big time, because home crisis is far early started before COVID, and COVID is only accentuated it. So it's an opportunity one way, and it is a difficulty for the people who do not want to change.
Got it. Thanks, Sunil. So, what comes to my mind is you touched upon consumer behavior, which I wanted you to tell me about the millennial. You spoke about banks, you spoke about the intermediaries. From my experience, I wanted to bring in that even the India stack, it's come into being for some time now. The UPI itself is innovation. So the government and I would say the overall push for digital is already there. E-Nash, e-signature, e-Aadhaar, which was there, the video KYC, all this is making it frictionless. The consumer today can sit at home, like you said, Pankaj, buy Amazon or an investment product like a mutual fund or an insurance. Why not even take a loan or buy a house, which is now on video? So all this is actually making us believe that there are enough of I would say companies that are looking at analytics, looking at alternative way of underwriting these guys. Bureau data is there, alternate data is there, scorecards are being built, and it's leading to a disruption, if I may. And I think this disruption will continue, because we want the young to get back to work. We want the young to spend for the economy to run. And I think all of us as an environment come together. Keeping that in mind, actually, Shiv, I would like to call you in, Shiv, because this disruption, I believe, will change the way companies, managers think about their talent requirement, people requirement, skill requirement. Do I need to work from home? I'm comfortable working from home. It's been 68 days since I've actually stepped out of my compound. Um, uh, so that, and I think I'm more productive, not wasting time commuting to office. But what kind of talent, people, skills, upskilling? What are your thoughts around that?
So I don't think there's any talent manual out there, but I'll just tell you what I'm hearing from clients for both, of course, when they're trying to hire or even look at their existing talent. I mean, 3-4 things come to mind. I think one is people are looking for the ability to learn new things quickly. Who is able to learn? So who has that, what I would call the beginner mindset, right? When they're, when they're going about things, who is able to lead in this so-called VUCA world that we're going to look at. So I think that's something that more and more we hear people say. The other that you touched upon is digitally savvy. Now, digitally savvy doesn't mean the ability to use Zoom. I think that was 60 days ago, and we've all passed that test. But really, people with the ability to use technology or data or analytics to solve problems, right? Rather than the traditional way. I think that's something that we hear people say. Of course, the favorite phrase now we hear a lot of is the so-called wartime leader or wartime CEO. And it's really about, leaders with this agile mindset, high EQ, people are looking at. And some words that to me, we hear a lot of now, which we didn't hear enough of earlier. I mean, words like resilience. Sunil spoke of sort of owner mindset, right? Doggedness, self-starter, adaptable. I think just basically people who, you'll get knocked down, but you're able to just get up and run again. So I think we're hearing these words, all of these probably mattered forever. It's not like these are all new things, but I think this is just accentuated the need for these kind of skills.
Thanks, Shiv. Thanks, Shiv. So, what I wanted to do was also touch upon Pankaj and Sunil, and probably even Shiv, you could give your thoughts. We, at CRIF have started creating a culture which I think was already there, but even more so of sharing more. We have our head office based in Italy. Uh, they got into lockdown before us. So we learned on how our work from home and, so-called social distancing. So even before the lockdown, we were already at 33% working from office. So there is a lot of learnings that are coming in, and the culture of sharing, because now the world is smaller. So that's what we are looking at. And some use cases which are working in another market automatically can get, translated over here. If there's one partnership working somewhere else, we can bring it over here. But what do you see with this shrinking, interaction in office? It is going to be virtual. There are 4 people on a screen. But what kind of culture should companies, specifically in financial services, be thinking about? Because banks, NBFCs have huge number of people. They have DSAs on one side, which may not be on their own staff. They will have software professionals who probably not on their own roles. It could be outsourced. So what do you think the culture should look like for these large organizations? Maybe Pankaj and then Sunil and then Vish.
I mean, number one, I think I do accept that what has happened post-COVID, it has solved the problem, but everybody was trying to go and find a way. I was trying to find a way as a CEO of an organization. Are there parts of the job which can work from home? So I think let's be assured this is going to continue work from home. But this was very successful during this COVID time. We should not forget that organizations have been built over a very long period of time. So people had emotional capital, they had social capital. I mean, tomorrow morning, you want to start an organization completely online and then do it. In financial services, it's a very high involved category. You are taking somebody's future, involvement, emotions. You cannot have whole of the job completely moving up, because today you had that social capital because you worked in the past. It's very easy to come back. I knew Shiv, I know you, I know Sunil for very ages. I can come back on a Zoom call to start talking and start doing my business. Imagine I've not been known to you for so many years from Adams. I have no interaction with you. I don't know how do you work, how do you react, what kind of a problem I can solve with you, what cannot, what should be my approach. That social capital happen when you work in a very cogent environment. My sense is, you just can't completely throw away. So a lot of people have started calling back and saying that everything will move and commercial real estate is going to collapse. I don't think that's going to happen. They're part of the job, which anyway had to get outsourced, which anyway had to get work from home, which is better. Like when I was doing insurance, I used to always wonder, why should I have my underwriter sitting in office? Those people can, because they have all the data, they can sit at office. I mean, they'll be happy, they'll be more productive, they will send me cases much faster instead of traveling 2.5 hours on each side to come and work in office. So my sense, the culture will be the jobs which can happen outside, but people will be more involved. People will have more emotional deposit with each other. That culture which we as a leader we were trying with actually automatically happened, because we want to get ready if there's tomorrow one more COVID or any other thing. I can come back and do my business on Zoom only if I've deposited. You can withdraw from a bank if there's a bank balance. So I have to create a balance, the social capital balance, the emotional capital balance. So I'm seeing that organizations and leaders are becoming more concerned about the people, even from work from home. Are you fine? Are you not there? So I'm looking it becoming a very entrepreneur driven, because even if you work partly home or partly in office, lots of freedom coming in. I'm doing completely leaders giving huge amount of space for people to try new things. So basically a culture from being a manager, it will become a culture of leadership, which is entrepreneur driven. So it will be an entrepreneurship. So there'll be an organization and there'll be budding entrepreneurs within an organization. And if it doesn't happen, then it just can't work, because you have to work at a distant level. So that's my sense.
Super. Sunil, what are your thoughts on culture?
I agree with Pankaj largely, and I'll just build on some of the points what he just mentioned. And I would take my own organization's example. The cultural anchor for ASK is competence, capability, and compassionate. These are the cultural anchors of the organization, correct? Now, with the COVID, they are not going to change. They are going to be the cultural anchors. But what is going to happen is, because you are going to be working with constraint, so you are going to review the resources. You are going to relook at the resources and you are going to reallocate. So what is collaboration is going to be the new cultural anchor, which is going to be equally going to taking the center stage. So collaboration is going to be the most important cultural anchor, which will come into play to solve the conflicts, to reduce the turnaround time, to increase the productivity, to increase the efficiency and effectiveness. So that's first part. Second part is, I think, using successfully Twitter, Facebook, WhatsApp, and maybe Zoom calls nowadays does not mean technology. Technology goes beyond at all levels. So I think the bigger change, what I'm hearing is, and I used to hear from the leadership teams across organizations, including mine, that technology is the enabler. I have corrected it. I said technology is a force multiplier. So technology is no more going to be an enabler, but it is a force multiplier. So it is going to change big time. Transparency, that means everybody would be available all the time. Everybody would be monitored all the time. Everybody would have less mistakes or accuracy. And if there are mistakes, those would be accepted, corrected, and moved on. So my sense is that there's no fear. In the physical world, you can take long time to understand this part. But in a digital world, it is much more easy to find out a mismatch. So whether we are going to move to the digital totally or we are going to be phygital. So I think the phygital journey, it looked like to me, is going to be the interim path. And then the journey is likely going to be, so new cultural story is going to be phygital leading to digital.
Super.
So
well said, Sunil. Again at CRIF, exactly, I would like to share, we have even, in our emails at the bottom, digital next. Because it's the culture is going to be digital. You're right. That's what we believe in too. Shiv, what do you think the culture is going to look like?
I think just adding on to, not to repeat what Pankaj and Sunil said, I think 2-3 things we see. One is, of course, the emergence of gig, right? And how do you create a cohesive, collaborative, and interdependent culture between what was a traditional organization, the permanent organization, and this new freelance organization? So I think the core, the classical organization structure itself will be challenged in some way. I think that's number one that I see. I think too, if I look at millennials and sort of Gen X, right, and I would put all of us as sort of Gen X, right? So I think a healthy mix of these two, because you've got millennials who are going to come in with lots of great ideas and energy and they're hungry, and Gen X is going to bring experience, and you need both in a time like this. So I think that getting that mix right. And I think fundamentally one thing I've heard from lots of people right now is the culture of just doing more with less. I think organizations have realized the amount of fat, for the lack of a better word, that they are carrying. And they're just, I think this is just it's a wake-up call for everybody. So these would be the 2-3 things that I would see evolve.
Super. So thanks, guys. I appreciate you sharing different aspects of what financial services could look like. From a risk perspective, I could summarize. I think bureau data clearly is important, but alternate data will make things change. Young economy, young population like India. Going digital is also crucial in all aspects of financial services. So I think the use of data, robo-advisory, everything digital is going to happen. So with this, Shiv, if you could just see if there are any questions that the panelists could take.
Shiv? Sorry, I was on mute. Yeah, sorry, there are quite a few, so I'm just going to try and skim through and find. So there's one question which is saying Mumbai is a financial hub, and obviously Mumbai is badly affected by what's going on. Is this the right time to take calls on multiple headquarters like multinationals have? I mean, that's any of you with a point of view on that?
See, my sense is that even the International Financial Center has gone to a gift city. Okay, Mumbai would always continue to enjoy the financial center status. It is going to be financial capital of the country, though the real estate which has gone to the roof in a period of time. To just get you into context, that Maker Max City was in a hay time have touched something like close to 450-500 rupees a square foot rental, have gone down to closer to 300 rupees, and the rest of the buildings today have gone down to something like 200, 225, 250. So I think affordability is coming back. Mumbai has got lots of enabling environment for the financial services, and it is going to be very important, vital to see that Mumbai is not going to go. The status is not going to go away. The same thing we have heard about Brexit. London is not going to be anymore the financial hub of the world. Certain cities have cultural attractiveness. Mumbai has that attractiveness. Mumbai Devi, once you come in, it doesn't let you go anywhere. So Mumbai is going to stay here very, very strong, irrespective of COVID.
Sure. Pankaj, question for you from Sadashiv Nayak. He's saying, good to hear from you on your approach of your team post Demon. In a situation like today, where there are many small entrepreneurs who are likely to start from ground zero financially, what is the one operational advice you have for them?
I didn't get the last one. What you said?
For smaller entrepreneurs who are going to start potentially from ground zero again financially, one operational piece of advice for them.
I think two things. When in a situation like this, only you have to have a growth mindset. If you don't have a growth mindset in a situation like this, a lot of people actually, when you're starting, when you're coming from the background of problems, issues, you basically get into a cost mindset. Cost is important, but only you should be conscious about it. And one thing, if you have to believe, you have to succeed against all odds in terrible time and make a big out of it, have a complete growth mindset. I think to me, that's the only thing. Rest everything people learn operationally, how to use capital, because I think Sunil started mentioning in the beginning that how important and prudent is to go and save your capital. To me, I think having a growth mindset doesn't mean just blurring your money out. So I always balance growth mindset having with cost consciousness, not cost mindset. To me, these are two most important things to go and, as any entrepreneur in a typical time like this.
Sure, thanks. Another question, what is the future of the mutual fund industry, especially after Franklin, Templeton, people have lost faith. Have they lost faith in that industry?
I don't think so. I'm actually more bullish because you are looking, and we are staring at a world which is going to be low interest regime for long period of time to come. And mutual fund is one of the very few platform which allows you to go and move from savings to investments. One has to also look at that this is not the first time. It happened 2008, market fell down. It happened in 2016. It happened in 99, 2000, 2005. I can go back to the history. And if you look at from 2000, the industry was some less than about 2004. The industry was 4-5 lakh crores to, which is about 7 times bigger than this in last 12, 13 years time. My sense is since the ownership of equity and overall investments is only 5 to 6% of the overall outstanding money which people actually enjoy. And people are just looking at it from the perspective of what has happened in one credit market. But that credit market is top 2-3 funds in top 50 cities, which is only 15% of the overall asset under management. Rest 85% of the assets have performed very well. In fact, it will grow disproportionately from here because people would like to go and look at more conscious about how do they build their lifetime goals, because they realize, as Sunil has repeatedly said, that and for building any lifetime goals, you need to have not only a financial capital, you need to have a patience capital. And to get both of them, mutual fund will be the best platform for them to do it, because it will allow them to go and buy and expose themselves into equity, into debt, into gilts, into short-term, real estate, alternates, who will still provide this kind of an opportunity for them. Maybe you can do this conference call after a year or 2 years, you'll be surprised to see that net asset under management has grown disproportionately.
Okay. Sunil, question for you from Mr. Ravi Jhunjhunwala. And you talked about, only do what you're really good at, right? Stick to the basics there. It's a specific question around ASK. So where would you say ASK is good at?
Yeah, first and foremost, with being a money manager, what we are good at, we enjoy the governance premium. And that's made us the largest portfolio manager of the country. We could able to raise close to $1 billion assets in last 10 years. Out of that, 50% of the asset came from 47 families. So the repeat investors and our average ticket size of the real estate investor is $1 million. So what probably ASK is good at is that we are basically preservation of capital, identifying the risk associated and with the risk adjusted returns with enough margin of safety is our approach. We have been very deeply focused in last 12 years time, never got excited to be a small bank, never got excited to be insurance company, neither a health insurance company, neither we got tempted to do anything which we can easily do because of our competence and capability that group has got, because we have the 4 co-founding partners along with 2 promoters. And I think all credit goes to both the promoters to really support the concentrated focus and working deep in whatever you're good at. Just to give you a perspective, in 2008, we had 3,000 crore AUM, and today we are 58,000 crore AUM. And we only deal with HNIs, ultra HNIs and super HNI, which is very sophisticated investor. So I think governance premium, to my mind, in our sector is the most important, along with your ability to generate returns. We do what we say, and we say what we do is our core. That's what ASK stands for. So ASK is attitude. ASK is an attitude of practicing humbleness. That's the way we actually look at the wealth and the asset management piece at ASK.
Sure. We have a question from our common friend Siddharth Raisurana from ABC, and he's asking actually both Pankaj and Sunil about saying, we spoke about this owner-promoter mindset. What is your advice for CEOs or CXOs across industries when they're building out their leadership teams? What advice would you give them?
Pankaj, you would like to take first, or should I go first? Okay. So, very interesting question, Siddharth. And I'm sure this is going to be very helpful to many aspirational entrepreneurs. See, owner manager, having acquired a lot of knowledge and skill for 20 years, 2 decades, 3 decades, and then having that drop of wisdom is very valuable than the bucket full of knowledge. And in that entrepreneurship, you need to have that ability to take fearless risk, ability to take, not having any insecurity around you and your approach. The world out there is more tougher. Entrepreneurship is much more easier, provided you have aligned your interest with whomever you are partnering with. So alignment of interest is the most important factor. One has to bring in his own deep competence, and hence it becomes a multiple tired vehicle, which can actually go far longer and can take much larger load, and still can continue to do well. In fact, I feel the large organizations, you have to climb the Mount Everest every year. And when you start your own, you are actually doing excursions in Sahyadri, but you feel so good about it and the world looks at you very successfully. So my sense is that it's a beautiful journey, but it has to be calibrated. First question is who you are. If you can able to answer that who you are, then probably it is easier for you to align that into. So I personally felt I enjoyed the journey of owner-manager framework, and it's a solid opportunity in India because Indians are having the entrepreneurial mindset. And Indian promoters also want more professional partners who can actually build their businesses, grow their businesses, forward, backward integrations, and build those businesses a little more deeper with good alignment of interest. I think alignment of interest is the most important factor in this when you talk about owner-manager framework.
Thanks, Sunil. I think the most, in my mind, when you start building an organization, is first to ensure that everybody has a very strong purpose and they're aligned on that purpose. Because history has shown organizations which are tied with purpose actually succeeds in all form, whether it's in a small, big, large, across globe. So you have to tie everybody very strongly, align them for a purpose, because organizations can make profit, but they may not sustain if the purpose is not there. Purpose is always bigger than profit. That's number one to me. Number two, I think when you're building an organization, ensure that you start building an attitude of an organization, which is very, very important. Purpose will give only a sense of direction, but how do you achieve that sense of direction? To me, I think 2 or 3 things which I learned in my life, and I have really enjoyed with my colleagues, and one of them had been think big and think different, and never ever imagine lower the power of collective intelligence. It's always better. 10 minds are always better than 1 mind. So when you're aligned and if you're doing 10 minds, it has got a multiplier effect. So build a culture in an organization where people can actually challenge each other and the best of the idea can survive. The objective is that what is good survive, not who is survive. It's not an individual. It's difficult, but I have seen it in my life twice. We've been able to build that sort of a culture. Last, I very strongly believe whether what Sunil said is chances lead to choices. You need to have that risk appetite. If you're not going to take a chance and believe and wait, some choice, something will happen to you and I'll get a better choice to go and run a business, it will never happen. So I very strongly believe that chances lead to choices. And to make that happen, you should be ready for it. In fact, there's a story, if you have a time, 1 minute, I can tell you a story. Why do I believe that you should be ready for chances to choices? Like it's a mythological story. There was a small village, a town where people were agriculturists. And just to cut it short, I will run it plus. They never issue praise for Brahma and Vishnu, and they got very upset. Well, they gave a shrap to that village that there'll be no water, no rainfall for next 12 years. The only way it can happen, because once in 12 years, Shiv Bhagwan will open a damru and play it, and then there will be a rain, and then that can only happen. Otherwise, there'll be no rain. So all the villagers, they sit on a village and they say, what do we do? Somebody suggests, why don't we go to Shiva? They go to Shiva, but Shiva refuses. He says, whatever Brahma Vishnu has said is the right thing. I will only play once in 12 years. But there's one gentleman who gets up in the morning, goes to his field, till the field, go and just practice how to sow the seed without a water. Everybody is enjoying, sitting under a tree, eating, drinking, smoking. They say he's a fool, he's an idiot. When there's not going to be any rain for 12 years, why the hell do you work? Why the hell do you sweat? Why the hell do you toil? Seeing the hard work of this one single gentleman, Parvati feels very bad and goes back to Shiva and say that, look at this guy. But he says, no, I'm bound with my vachan. I can't change it. So she uses a very different way, because she says that, you know why this guy is toiling every day? Because he's doing it, so he's ready. He's practicing it, so he should not forget it, right? So that's why he's going to the field every day to do it. And Shiva, if you don't practice for 12 days, you will forget. You won't know how to play a drums. hearing this, Shiva thinks, yeah, it could be a possibility. He starts playing his drum. Rains come. The moment rain comes, there's only one field which is still, which is ready. So that's what I'm saying. Chances lead to choices, but you need to be ready for it. And this guy had practiced it. He was ready for it, and he became one of the bigger guys. So entrepreneurs, think big, think different, have a purpose which is very outcome oriented. Ensure that you take chances and be ready for it, because chances ultimately will lead you to many choices.
Lovely. Thanks, Pankaj. Real estate question. So I guess, Sunil, so question is, real estate is in shambles, unsold inventory, lack of trust amongst home buyers and the developers. Still, prices are not going down. Real estate players are crying foul for lack of liquidity. Chicken and egg situation. What are your views on this?
See, real estate is unlike the organized industry yet, like a Maruti, where you will have an invoice which is going to be same in Gurgaon and same in Trivandrum. Two next door projects consume the same steel, cement, but they are differently priced. So the fact is that it is the nature of the beast. And the fact is, price is linked to risk today. Price is not linked to opportunity. Opportunity is where you will complete and you will stay there and you'll prosper. But I think today the pricing is linked to the risk, whether you will get your house or not. So the prices have already corrected, and because the prices are not really only built by the developers, let me tell you, 40% of the house cost is paid to the government through GST, for stamp duty, registration, and so on and so forth. So we keep saying that, oh, my house, whoever owns houses, my house has increased the cost, because every year government is saying repricing the basic land record prices. And those are linked to stamp duty. Stamp duty is obnoxious in this country. 5%, 7% stamp duty, 1%. By now, as Navin has said, digitized land record, you would have been in a position to sell a house like you are selling a shares in a demat account. I think we need to move into that direction where we need not, and we pay online stamp duty, so the more and more transactions can happen. So my view is at this point of time, prices would come down, prices have come down, and prices will only come down of those projects which are bankable. They would be, those prices are looking real. You may get 50% discount from a property which is never going to get completed. Will you ever buy it? You'll never buy it. But the property which are getting constructed has a risk premium lower than the property which is never get completed. And hence the pricing is going to be very different. My view is that 5-10% additional discounts at this point of time is not something. But if one is expecting the crashing of the gate is going to happen and then 30-40% is going to happen, the margins at this point of time are not more than the prices what they can afford. So my sense is that I don't expect crashing of the prices. But yeah.
And specifically with commercial real estate, given the work from home.
Commercial real estate has done extremely well for last 5 years, and we saw the embassy REIT also having a super duper performance on the market. Last year, just to give you some perspective, we have consumed close to 6 million square foot in IT. 6 million. Can you believe this? 6 million, and every 100 square foot, probably you get one formal job, maybe 2 informal jobs, and 2 unskilled jobs, correct? And that's the way 5 or 6 jobs get created. So that kind of engine is that part. And that is IT, ITS, and all these data centers, or these digital or online or e-commerce companies, along with the other existing companies like Amazon or Microsoft, or that might, all those companies have expanded in India. My sense is that the currently under construction inventory is also significantly large. Working from home may impact in a quarter, the 2 quarter on the rentals. People would yet not made up their mind because of the deep crisis one would face is not really coming to the surface. What is happening in the home country, what is happening globally, what is happening in India. My sense is that working from home may give some fillip to the residential sales, but at the same time, international companies cannot really work the way current specifications are. Each workstation need to be compliant, like COVID compliant. That means your workstation size has to be increased. those earlier period we used to have those WeWorks and co-works and this business center business is also going to be a question mark at this point of time, that we need to really think through. It was a business which was supposed to be the great business, and it is going to be good business, but I do not know how COVID impact it is going to make. And it looked like that they would be suffering the most. Offices probably would have some challenges on the rental or the new projects. But ITS spaces, I am little positive on it. I am little negative on the retail malls. I am negative on hotels. And I feel we should worry about the office market, but not an IT SEZ market or IT buildings market. So that market probably would continue because India is still very attractive. You are $0.7 a foot, you are paying rental, which is internationally, which is you will never get anything of this kind as a space. Plus you have a talent out here. You have young people, you have people who speak English, the people who are good in mathematics and computer science and sciences in general. So I think talent is available. The governments have made a lot of efforts, and I'm sure government will ensure some more attractive packages on SEZs also they can bring in. But net, I don't see really, it's early, as Pankaj rightly said. It's too early for making any sweeping statements at all. Even retail malls currently will have difficulty, and we'll have to watch that space maybe another 6 months time and review the situation, and then we can think through. But right now, I don't see anything which is falling off the cliff and which is going to go out of fashion.
Sure. Pankaj, for you on insurance, there's a question about, we talked about how life insurance and other things are going to go up. But what is the impact of COVID on the insurance industry itself in terms of their own financial health? I mean, do you expect changes in the way insurance companies are run?
I don't think so. It's like, at least in India, it's not been you know the statistics, you know the number of people getting infected or fatalities, what we have. From the insurance side, it would be less, but I think from a consumer side, it's a big trend. As I said, in the absence of social security, I clearly see that where an advisor or a salesperson from insurance has to go knock on the door. After 10th door, the 11th door open, and he says not interested. And you have the same enthusiasm for a 12, 13, or 14 door to sell one policy. My sense is that will change disproportionately. You will find more people are more inclined to go and buy it. What they have seen it right now, because jab tak hota nahi, ab tak everybody feels mujhe kuch nahi ho sakta. But I think this one occasion has shaken everyone. From the perspective of manufacturing insurance company, I clearly see there are a lot of innovation which will come back on two sides. One, the product will become more and more simpler because there's no point in giving a product which are so complex. You will get return, you will get equity, you will get partly interest. After 10 years, you'll get this. The guy doesn't even understand. In fact, as a sense, I used to go and talk to a lot of my sales agents and customers. 90% of them didn't even knew what they were buying. So transparency will come. Products will become very simple, and products will be open, very, very, very flexible to cover these kind of diseases. You don't need to buy 20 different products. You may need to buy one composite product around health or life, where they will cover some of this kind of thing, because you don't know what's going to be next. So a lot of innovation on product side from manufacturer, a lot of interest from consumer side to protect their lives. So I think it's a win-win situation, and I see, as much as for mutual fund, I clearly see next 3 years, and I think I'm very confident, and I can put my neck on block for this. Insurance industry, life and health will grow disproportionately from there.
So Shiv, I will add over here, because we work with almost all the big insurers in India, right? And they are looking to see how it could be completely frictionless. I think from a consumer perspective, they want to make it so easy that the consumer understands the product, like, Pankaj said, but more importantly, to get a cover. So it's not the investment alone. It is the insurance that I will be safe, or my dear ones will be safe, or after me, they will get something that will actually help them continue their life. So they want to make it very simple, and they want to make it as frictionless as possible. And, it's going to be partnerships that are coming together, making it easy to underwrite both on, your income and your health. If I can do it without you submitting me an paper, or actually going to, a center to actually test yourself. Today, insurance is selling. Obviously, they are not forcing you necessarily to go to check, is there a product that I can create that can be, a smaller sum assured, what everybody is looking at.
Navin, just sticking with you, you talked of contactless economy earlier. I mean, there's a question around, with the rise of digital, would this lead to mis-selling of financial products? I mean, other digital threats that we see to the ecosystem?
So, in fact, I would see digital being more transparent. Okay. Typically, to sell anything digitally is very tough. It is from the source. So, typically, if I want to sell a product, it's not that I'm going to come, into your house and give you a brochure and all that. Digitally, typically what happens is, I think it is the consumer who is going to come and ask. There will be options that the consumer will have and will make the choice. So the robo advisory, or knowing what your background is with data, with machine learning, with artificial intelligence, you will be given the choice to pick up what suits you the best. So in fact, the mis-selling is lesser because the intermediary actually goes away. It could be available either at a marketplace or directly with a manufacturer. So their engines will actually give you as much as data as possible for you to make the choice and compare.
Sure.
Particularly, Shiv is getting an empowerment in place. Today, a consumer is not empowered. A manufacturer is more empowered. The moment you transfer the empowerment from manufacturer to a consumer, and how do you do that? Data science is one of them. Cognitive science, which is the most important tool right now to understand who you are. The more and more people understand who you are and their ability, then what is going to suit them, and then they feel more empowered to take a decision. So we had this concept called that, in sales, there's a lot of con selling, C-O-N, con, jhoot bolna, con selling, and we wanted to move con selling to counseling, C-O-U-N-S-E-L-L-I-N-G, which is, to counsel a person, empower them enough so that they can right decisions. So I think Shiv is very right and Navin is very right, and we're going to move in that direction.
Sure. No chat like this is complete without asking people their opinion on the 20 lakh crore package. So I can see 2-3 questions on it around just your views. What else should have got done or hasn't been done? Just any high level views on that. Pankaj, maybe you first.
I mean, I was equally excited. I also jumped the way the Sensex jumped that day because I thought 20 lakhs crore, 10% of GDP. But I think we have to put a head on a shoulder back and see we are in a country which is deprived of capital. We don't have so much of luxury to go and start spending that kind of money. So the only way you can really come out of this situation is probably it was more of a marketing communication which happened. People thought 20 lakhs is actually going to be like in hand. So one of the reasons you can trigger that by way of liquidity. But my sense is 1991 was equally bad. We never had this kind of resources even then, but today we have better resources of $480 billion. So what would change the course of our economy is not only a stimulus, but very solid, deep reforms. Reforms against which is going to help us create manufacturing, momentum, giant momentum. So whether it's around land, whether it's around labor, whether it's around power, whether it's around capital, everything. When you don't have money, just open it up, just do lots of reforms. So my sense is, if you look at 20 lakh crore, not from the lens of stimulus, actually it has got all the elements they are seeding it for reform. So I'm very sure that you'll see in next about 1 to 2 to 3 months time, more landmark reforms being announced. One of them already happened in the form of coal. It happened in the form of agriculture. A lot of people have just missed it. They thought one of the two announcements because people got overwhelmed with 20 lakh crore. But these are two significant reforms. They're very large reforms. So just turn your clock back to 91. No money, go back for big, massive reforms. And I think that's what the government is trying to do now.
So Shiv, just to add that one line on this, what Pankaj just said, the 20 lakh stimulus was like everybody was expecting that helicopter money is going to go into the bank account. So in Marathi, Vamanrao Pai, a very well-known spiritual guru, have said, "Tuj tujha जीवनाचा शिल्पकार." In English, in Hindi, आप ही आपके जीवन के शिल्पकार हो. You are creator of your own. Don't depend on anything from government. government is not going to, government can be enabler, they can give you here and there, but depending on any kind of cash transfers, any kind of direct money into the bank accounts, or government taking any cost of the businesses, actually speaking, doesn't seem to be on the card, and unlikely it is going to happen, because profits are privatized and losses are socialized. Government believe that very strongly. So I don't see that happening. But as Pankaj has mentioned, many reforms, when we don't have a mind of reform has been announced. We have a mind of a COVID, we have a mind of a survival, and we have put in the seeds of revival and probably a terrific reform like land reforms, correct? Which is very interesting, agricultural reform, which is even more exciting. So a lot of things have been positive and good, but whether they would translate into a meaningful, I think, demand side growth, I think time will tell. At this point of time, it can create maybe more supply side opportunities, because everybody get a loan, and the loan will be utilized for getting your businesses right, and maybe hopefully keep your employees there with little tinkering around. But it may not really, in a one fine day, it will take longer time to create some kind of demand to come back that 100% what we seen pre-COVID. It may take a little more quarters on this one.
Sure. Navin,
yes. Yeah. So, my take is, number is just a number. Eventually, I think there are various segments, there are various stratas. If I see, from a bureau perspective, India is a very credit hungry market. Everybody is looking for credit, either to grow their business or sustain their business or sustain life, right? I think this year, everybody is talking about survival. If you do your basics right, then you look at growing, right? Now, let's take what the government has done. If I'm looking at the farm, so they are looking at the farmers, they have added, animal husbandry, fishery. So they have come out with that Kisan credit card that can be given to everyone. So I'm looking at the rural area. They have done something for them. Is it enough or not? I think time will tell, but they have done that, which is a good thing. MFI sector, have they done something which is actually looking at more rural and semi-urban? Yes, they have done that. Have they given something to NBFCs who are looking to actually give credit to people who didn't have credit? I think there is a support that has come in. So basically, I believe the smaller, ticket size loans is what they have tried to support in some shape or form. There is also a credit guarantee that they have introduced. So I think this segment, they have done a sizable bit.
Sure. Thanks, Navin. Just conscious of time, we're already way over limit, so not going to keep you all for too long. Just a couple of questions. Maybe Sunil, so there's a question about your take on the rupee to US levels. What is the impact on the both short term and mid term?
I didn't hear you, Shiv.
Your take on the rupee to US dollar levels, short term and mid term.
The fact here is that after real long time, and I really think that three things in my life in 50 years have happened. One is that a significant confidence that we would be an economy with low inflation for a long period of time. Second, that economy, because I myself have taken a home loan in 96 at 16% annual rest. So that kind of interest rate situation was there in 96, and today we're talking about less than 7% or closer to 7%. So lower interest rate regime is something which is very, very impactful. And third is that never ever I have seen in my life the oil is going to be so low and people can be so irrational that at some stage they will do futures contract with negative price. Correct? So the fact of the matter is that lower interest rate, lower inflation, and lower oil prices, which actually going to help government a lot. And our currency is a lot to linked with our current account balance of payment conditions. And a balance of payment condition, after a long time, we are going to have a surplus situation. And if we are going to have a balance of payment surplus because because of the oil, which is the larger import bill, which is going to be significantly low, gold is anyway has normalized and been significantly lower. The third is government is working quite hard to get the manufacturing of electronics in India so that we don't really import so much of electronics from China and the other countries like Taiwan and other places. So the sense I have is if we have a positive current account and positive balance of payment surplus, that would lead to a currency stability. So I don't expect the currency to really devalue significantly because India is in a sweet spot where we would have currency would remain stable for a shorter period of time. Long period of time, we'll have to wait for a Trump election also, because I don't know what kind of policies he brings in the new avatar, if at all he comes back. Because more and more economies are getting inwardly looking. And yet, till yesterday, we were always talking about world is flat, world is a global village, we are all networked, connected, we are all brothers and sisters across, and there was a lot of import-export equations were there. Now, how those are going to get demolished will decide the medium and long range. But in shorter period of time, the way India is poised, look like to me that currency risk doesn't seem to be there, devaluation risk.
Sure. Just last, I think we're almost out of time. Just a last question. There's a couple of people who've asked this, so I should. What is your advice to an investor planning to sell investments in mutual fund at a loss and get into 3 PMSs? Should this be done in stages or in lump sum?
They should continue with PMSs. They will continue with mutual funds. I don't think they should do this. This is not time to sell your losses. But obviously, I'm just saying spontaneously, this is not a time to book the loss and move to PMSs. It is not a question of whether PMSs are great or not great. But if you have a right selection of fund manager and you have allocated your capital into the good baskets like the large cap basket or maybe the large cap, mid cap basket, and you are way away from the nano cap or a small cap basket, and if your fund managers have got right risk management framework in place, then I don't think one should be in a hurry to really take the decision of selling at loss and moving to a portfolio, is my view.
Lovely. Thanks, Sunil. I think we are completely out of time. Any last closing comments where any of you?
I have one thing to generally share with everybody, which has impacted me the most, and I felt I should share this part. This is what Buddha has said, that pain is inevitable, suffering is optional. So whether it is a COVID, global economy, Indian economy, your company, your job, your income, neighbor's income, it is going to be pain. There is going to be pain. Pain is inevitable. Question is, suffering is optional. So, and the sufferings happen as per Buddha because of 4 things. And the first is that he says excessive attachment. When you attach excessively to anything, your sufferings increases. Second is cravings. आज कुछ तूफानी कर सकते हैं. Cravings. And third part is indulgence. You know that you don't have to indulge, but you indulge. And that increases the sufferings. And the last is the master is denial. We are always in denial. And if you are in denial, then sufferings will happen. So if one has to manage this pain of COVID, economy, income, stressful life, I think we parameters beautifully to ourselves. Am I excessively attached to something unnecessarily, unreasonably? Am I doing extraordinary cravings in the unreal time? And am I indulging for no reason in something which I should be completely staying away? And finally, am I real or I'm always in denial? If that, I think this would help us in selling through this period successfully, and we'll have less of pain because sufferings we have not opted for. Is my final say.
Thank you, Sunil.
Yeah, I mean, Buddha has given all his blessings, so we don't have much left much with this thing. I almost went into my trance meditation. But the fact is that since a lot of people are going to talk about investments here, the basic principle Sunil talked about in the beginning is that investment is all about, when you have money, it's all about taking a capital, positioning it for future profits. That's what we live in for. But when the future is unknown to all of us, it's completely chaos. So you have to find a way out of future. How do you find a way out of future? Number one, stick to your asset allocation. Don't get greedy when you're making money. Don't get depressed when you have less money. The only way to avoid the science is to use an asset allocation. Stick to asset allocation. That's the only way to make money in long term. I think number two, my sense is in a post-COVID era, one thing, just keep one sentence, one mantra in life. I don't want to go deep into it. Good is the enemy of great. Don't feel good about when you're doing things. Feel great about doing things. For everything what you do in life, if you believe that good is an enemy of great, you'll come out with flying colors. You'll come out with fantastic successes and great achievements. So all the best to everyone.
Thank you, Pankaj. Navin, you want to just wrap this up?
Yes, I could. So, like, I think I've heard both the stalwarts talk. From my perspective, I think it's simple. Just control what you can control. Don't get confused. Don't lose sight of what you want to do. In financial services, even more, I think there is data and enough of data that can actually help us. So control what you can control, and there will be data and analytics that will guide you. That's what I would say.
Perfect. Thank you, Pankaj, Sunil, Navin. I think this has been fun. It's been longer than I expected. We've finished an hour and a half. Didn't realize that. I think thank you so much for being there, and thank you everyone else on the call. Sorry we couldn't complete all the questions, completely out of time. Thank you guys. Stay safe. Take care.
Thank you, everyone.
Thank you.
Good evening.
Thank you very much.
Thank you and good luck.
Thank you.
Thank you.
Thank you.